Alright, before we get started, take a moment, read this, because we don't get to learn Forex in a noisy environment where we will be easily distracted and multitasking. So let's get started. Observe, take notes, and get ready to elevate your skill. S&R zone and F&R zone. You get the full-blown understanding of the support and resistance zone and the frequency and recency zone. Before we proceed, let's get to know what the S stands for, what the R stands for, what the F stands for, what the R stands for, and what the Z stands for. S stands for support, R stands for resistance, F stands for frequency, R stands for recency, and Z stands for zone. Today we will discuss the support and resistance zone and the frequency and recency zone. If if both of them has zone, if the support and resistance has zone attached to them and the F and R has zone attached to it, what then is the zone? Zone is an area where price react. Wherever you see price react, that place where price have reacted is called zone. When the price get to this threshold, the zone threshold, price tends to react. It is like a threshold preventing price from breaking through. You know what threshold is? Like a barrier preventing the price from breaking through. The law of demand, we all know the law of demand. The law of demand states that we should buy when price is low and we should sell when price is high. So when price has gotten to that threshold, we should sell from that point. Then when price has gotten to its minimum low, we should what? Tend to buy from that zone. Ceiling and floor. Remember that maximum high which the price has gotten to, which is the peak which the price has gotten to, is referred to as the ceiling. Is referred to as the ceiling. While the bottom which price has gotten to, or the trough which price has gotten to, is known as the floor. So we have the ceiling and we have the floor. Your ceiling can also be your floor. As you can see in this diagram, you can see your floor here. If you're on this floor will be preventing you from breaking through to the downside. And this ceiling up here will be preventing you from breaking through to the upside. But this, your ceiling, can also be your floor. And how? When you walk through these steps and you pass through this place, this your ceiling has automatically become your floor. This your ceiling has automatically become your floor. Now, this your floor can still be your ceiling. How? When you walk down through again and come to this part, this your ceiling has automatically become, the ceiling has automatically become your floor. You get it? Remember, in the Forex space, they are called zones. The ceiling and the floor are called zones. They are not often referred as ceiling and floor. They are referred as zone. So whenever you hear that word zone, you should know they are talking about the ceiling and the floor. And what's the duty of the ceiling and floor? They are threshold preventing price from breaking through to the upside, and they are threshold preventing price from breaking through to the downside. So they are known as zones. These zones are called support and resistance zone. This zone, the one at the top side, which is the ceiling, is called the resistance zone, while the one at the bottom, which is the floor, is called the support zone. Support and resistance zone. What then is support and resistance zone? These are levels or areas where price, the market, had difficulty breaking through. What then is support? Support is a level in which price has proven historically that buyers have more pressure within that zone. As you can see on this diagram, this is your support level and this is your resistance level. You can see when it first happened here, it was bounced back. So that's to show you that buyer has more buying pressure within the zone. And when price came back to hit the zone again, price still rejected what to the upside. So that's to tell you that whenever the price comes to this zone, buyer has more buying power. And as you can see again here, so your resistance, this is a level in which price has proven historically that sellers have more pressure within that zone. And you can see here, when price get to this zone, price reject to the downside. And when price get to that zone again, it still what bounce back until it finally broke what the resistance zone. Your support can turn into resistance zone and your resistance can turn into support zone, just as we described on the ceiling and floor. As you can see on this diagram, this was once your resistance zone, and immediately price broke through it, it automatically turned to what your support zone. And you see when price turns to hit the zone again, that place support the price as the floor preventing you from breaking through to the downside. It supports the price from breaking through to the downside. So it has automatically turned into what? Support zone. Type of support and resistance zone. We have two types of support and resistance zone. We have the major level, which is the major zone, and we have the minor or micro zone, which I call the sub zone or sub level. That's what I call them. The major level, this is where you look for your buy and sell opportunity. Levels like this on the bigger time frame. These are where you look for your buy and sell opportunities on the bigger time frame, depending on the kind of trader that you are. While the minor or micro or sub levels or sub zones, you don't buy or sell from these zones. You tend to see these levels as where the market will react when price get there, so you can see them as your first, second, or third point of take profit. That's just the work of the sub zones. Things you need to know about support and resistance. Some of the things you need to know about support and resistance. So, one, they are not just lines, but they are zones, as you can see on this diagram. But first, you have to use your line tool to indicate them out, as it is here. You see, use your line tool to indicate them out. So they are not just that line, they are what? Zones. You can see. Then after indicating it out with your line 2, then take your horizontal tool to take part of the body and to the wick, like so. So whatever price we do within this zone is what you will react with. 2, always take a look at your left hand side, which is historically, when plotting your support and resistance zone, to see how the market has reacted in the past, how to draw support and resistance zone. 1, look out for the most obvious area where market has rejected the most in the past. As you can see here, this is one of the most obvious area. Market reject here, market reject here, market reject here, Market reject here and multiple rejection here. Number three. Number two, lowest recent support level close to the current price. When you open your chart, just like as you entered your house, the first thing you will see the ceiling and the floor. So when you open your chart, the trading view, what you should first of all focus on is how to get the ceiling and the floor of that particular pair you are about to analyze, which is the support and resistance zone. Number three, highest recent resistance level close to the current price. So all your support and resistance level should be, the first support and resistance level should be close to your price, to the current price, should be close to the current price. So spot that level where market has rejected recently when plotting your support level close to your current market price, and also recently when plotting your resistance level close to the current market price. Then the fourth one is where the market has rejected between the recent support and resistance level you've plotted and now turn it into support and resistance level. Between that level which you've plotted, there are some zone, active zone between that two levels. You can still plot them, extend them to the future, and then you can look for other zone like the zones after the resistance zone and the zone before the support zone. When we are on the chart, we'll take these 4 points to the chart and we will see if everything we outline here is what we do there, or we'll follow it step by step so you can see it to yourself. Note, you are to buy when price are at support and sell when price are at resistance. However, support and resistance level are not exact price point. They can change. For example, an area of support can become resistant if bias changes, just as it is here. This is your area of support. This is your area of support. This is your area of resistance. It can what? Change when bias changes. Remember, when price gets to here, price hit it, it reverses back. Then when price gets to here, price hit it, it reverses back. Now when price gets to here, you were supposed to sell from this point, but price decide to what? To break because buyer have changed and now price turn what? Into support level. You can use those support and resistance zone to analyze and trade anything tradable. Anything that is tradable. Anything that is tradable, you can use these support and resistance levels to trade anything that is tradable, to trade in the forex space, to trade your stocks, to trade in the crypto space, to trade metal, to trade commodity, and so on. Anything tradable. As a swing trader, your major support and resistance zone should be on monthly and weekly, which is the major one where you should be looking at. Whenever price get to this zone, I should be expecting a buy or a sell. While your minor or micro, or the one or how I call it, sub support and resistance zone should be on your daily, as what a swing trader. While your entry point should be on H4 and H1 as a swing trader. While as a day trader, your major support and resistance zone should be on daily and H4. The major one should be on daily and H4. While your minor or sub support and resistance zone should be on H1 and your entry should be on M15 and M5. Your entry should be on M15 and M5 as a day trader. I am a day trader. As a scalper, your major S&R zone should be on H1, your minor S&R zone should be on 15 minutes, and your entry should be on 5 minutes or 1 minute. Now let's get to the chart to learn how to plot these zones, the support and resistance zone. Yes, this is the chart. So now let's plot our support and resistance zone. We are using GBP USD. Remember, we can analyze this support and resistance zone in any pair. So now let's plot it following our step-by-step guide. One, two, three. Oh, okay. This is it. Now let's do the number one first. Number one says, look out for the most obvious area where the market has rejected the most in the past. So this is on H4. Let's reset our chart. This is it. Then what you have to do is to first shrink your chart. If you are using your computer, put your hand on control, and if you are using your mouse, roll it down. It will do something like this. Shrink it, or you use this plus and minus here to shrink it. Then you already know how to do this so that you can easily move your chart. Now this is it. So where is price currently at? This is where price is currently at. You can see the current price. Now where is our current support level? Let's look for our current support level. So where price has rejected multiple times. This is it. You see, when price gets here, price reject multiple times within this zone. Now it says look out for the most obvious area where the market has rejected the most in the past. Lowest recent support level close to current market lowest, where the market has rejected between the recent support and resistance level you plotted and not on. Okay. And to make these zones more more valid and effective is, historically, has it happened before? Historically, let's look if this zone, let's plot this one is one. Let's take our horizontal line to plot it like so. Put it here. I want to put my put it like this. This is it. Now let's check if it has happened historically, if this same zone has happened. Let me shrink the chart to make it fast. Okay, Yes, you can see our market react within this zone. You can see historically market has once reacted within this zone. So then that makes it what? A more stronger, like a zone that will be more effective, more powerful. So we've gotten our support zone here. Now let's look for our resistance zone. This is the area here. I can spot this market has reacted multiple times here. Let me take this too. This on H4 as a day trader. I forgot to go to daily, but do the same thing on your daily time frame. If you want to do your top down analysis, do the same thing on your daily time frame. Do the same thing on your daily time frame. Just spot area like this where market has rejected multiple times, and to see if it's a very strong zone so that you will have more confidence in it. Check historically if market has respected that zone, and we'll spot this. Check historically as market. Yes, you see what market did here. If you extend it backward, you will see more place where market. You can see it was a support zone here, came back support zone, and when market broke below it, what a later turn to resistance zone. So remember, it's a zone. Resistance zone to this pull down, and now what? Resistance, proper resistance zone for this, taking the market to the downside. Now if you want to plot, you take your rectangle tool, just take, you don't have to make it big, just take a bit of it, extend it to the future like this. Don't make it big, because when you go to the lower time frame, it will be all over your screen. So don't make it big, just do it something like this. Let me clone it. So I'll use the same thing here. Extend it to the future. So don't make it too big. Something like this. We are good to go, right? Whatever market we do within this zone is what we are working with. You can see. So this is one of your measured zone. Remember we said from daily and H4, this is one of your measured zone. And now, if you number 4 said bear market has rejected between the recent support and resistance zone between. So we plotted this, we plotted this. Is there anyone here? Yes, there is one. Market rejected here. Check, and this one you have to be very cautious of this one when plotting it, because this is in between. This is in between where you've plotted these two. And yeah, this is what if I when market gets a market reject to the upside, and when market gets a market pull down, you can see it pull back, and when market gets a push to the upside. So it's a very valid one as well. So what we are doing is that for this trade, you can come back, you can check it, you can come back to check it. This is February 3rd, 2025. So when this video is being recorded, see what market did within this zone. We are expecting a buy from here. When market get to this zone, we should be expecting what? A buy from this zone. So then we should be expecting market to do probably like this, and boom, either to this zone first and then to this zone. But this W, you should not expect it on this bigger time frame. It should be expected on your what? Your entry time frame. And now if you go to H1, there's it. So you can see how big it is here. You can see. So now let's shrink our chart here to see if we can spot any sub zone here from the current market. Oh yes, there's one sub zone here. There's one sub zone here. Just leave only the line because you are not taking trade from this zone. These are just zones where you are thinking that okay, when market gets here, I'll be taking profit out of the zone. So I prefer you use the line because you're not doing anything here. So you see market respect this zone, market respect this zone. You see? Then take the same thing. Yes, yeah. You see one here, you see another one, you see another one here. You get it. So just take your zone, plot it this way. Don't use the your rectangular tool because these are not zones where you are taking entries from. They are just zones where you be sorry. They are zone where you are looking up to okay, when market get to this point. Say okay, if you take your entry from this zone, let me show you. You take your when market eventually moves to this place, you take your entry here. So when market is now pulling to this place, however the market will form within this zone is what you will react to. You get it? So if it's formed in a way that you say, okay, no, let me hop out of this trade, then what? You hop out. But if it's formed in a way that gives you confidence to still hold the trade, you hold it to the side. You remember this is your H4 time frame zone. This is your H4. So when you get here, you should also observe the same thing. If it gives you a range to continue holding, you hold until this point. But if it gives you a range to close the trade, you close it here. That's us. It with the support and resistance zone. You can see the support and resistance zone. This is it. You get to understand the F&R. You can see that I don't just plot any random thing I see here. So I plot where market has rejected multiple times. You can see when market gets here, you can see on H1 how market respected it. So you can see one, two, multiple times. So that's it with what? The support and resistance zone. This is just the simplest way to find it on the chart. Do the same thing on daily. What I want you to do now, do the same thing on your daily time frame. If you're a day trader, H4, H1, and send it to any of my channel you have access to. And if you are a swing trader, do it for monthly, weekly, and daily, and do also send it. And if you are a scalper, do the same thing on H1, 30 minutes and 15 minutes, and as well send it. Now let's move to what the F and R zone proper. If you understand the difference between the two. I trust you now understand how to plot the support and resistance zone, and you know everything about the support and resistance zone. Now it is what? The frequency and recency zone. These zones are one. The frequency and recency are one and have similar functionality of support and resistance zone, but they are plotted differently. The frequency and recency zone has similar functionality of the support and resistance zone, but they are plotted differently. What is frequency and recency zone? Frequency and recency zone are levels where the market, the price, we had or had difficulty breaking through historically. Remember in the past, those levels where the market react and they have difficulty breaking through those levels. They are called what? Your frequency and recency levels. And this one, frequency and recency, they are one. But you know every zone in every market, they must have what we call the ceiling and they must have the floor. So since frequency and recency are one, so whenever you open your chart, any of the pairs that respect these zones, you should first of all look for your ceiling and the floor because you will buy when the price get to the floor and you will sell when the price get to the ceiling. And on this zone, the ceiling is also known as the frequency and recency, and the floor is also known as the frequency and the recessing. F and R floor zone. This is a level in which price has proven historically that buyers have more pressure within that zone. You can see it in the diagram. F and R ceiling zone. This is a level in which price has proven that sellers have more pressure within that zone. Your F and R floor zone can turn into F and R ceiling zone, and your F and R ceiling zone can turn into F and R floor zone. As you can see here in this diagram, when the zone was here, you can see it stands as what? As the ceiling, but when it has finally broken through, it came back to retest and stand what? As a support and what? Continue to the upside. Remember, you can use your line to just identify it, but no, it is a zone. It's a zone, something like this. So whenever market gets to that zone, whatever the market is doing there is what you will react to. That's it. Type of F and R zone. We still have the major F and R zone, and we have the minor, sub, or micro F and R zone. The major F and R zone, this is where you look out for buy and sell opportunity, and they are the zones on the higher time frame. These are the zones or the higher time frame. Whenever price gets to those zones, you'll be looking for a buy opportunity or a sell opportunity. Why this micro, sub, why the micro, mini, or sub zone, how I call it, you don't buy or sell from these zones or these levels. You tend to see these levels as where the price will react. When price gets there, so you can see them as your first, second, third point of take profit, and they are zones on the lower time frame based on the trader that you are. Things you need to know about the frequency and the recency zone. Remember, the frequency and the recency zone also stand as the ceiling and the floor. Anywhere you see two opposite candle is an F and R zone. Wherever, anywhere on the chart, any of the pair that respect the zone, anywhere you see two opposite candle is known as what? A zone. It's known as the F and R zone. If you just see two N opposite candle within that place, you should know that's an F and R zone. They are not just lines, but they are zones. They are not just lines, as you can see, but you just use your line to either your trend line to your horizontal ray or horizontal line to plot it out. But then you should see it as a zone. Your eyes should look at it as a zone within a given range where market just, you should just see it in this manner within a given range like this. Okay, what market will do within this zone is what I will react to. TV. Always take a look at your left hand side when plotting your F and R zone to see if the market has ever respected that zone in the past to strengthen your decision. Because if the recent zone also have a frequent zone, that makes it a powerful zone, more powerful zone. Not that the recent one is not powerful, it's powerful. But when the recent zone now has frequent zone, it makes it more effective. How to draw frequency and recency zone. Number one, we'll also take this to the chart and we see how we plot it following this step by step. Number one, look out for the area where two opposite candles meet, just as it is here. This is one of the area. Look at it here, where two opposite candles meet. there is a bullish candle and a bearish candle. They are both opposite. Any area where you see these two opposite candle meet, they are called the frequency and recency zone. You can see a bearish candle and a bullish candle. You can see. Number two, it has to be plotted on the body. You can see all these, they are plotted on the body of the candle, not the wick. You can see on the body, not the wick. Using your line to either your horizontal ray or your horizontal line or your trend line to plot them out and see them as a zone. Just see them as a zone. Number three, recent floor level where two opposite candle meet close to the current price. Like whenever you open your chart, you first have to figure out the ceiling and the floor. Just as whenever you enter into your house, your eyes first of all see the ceiling and the floor. So whenever you open your chart, you first of all figure out what the floor level, which is the recent floor level. That makes it recency. The recent floor level, figure it out, and also figure out the recent ceiling level. That's number four. Recent ceiling level where two opposite candle meet close to the current price. You see all that in the chart. Then number five, recent retracement zone, or the area where price recently pulled back from. You can see it here. This is the recent. This is how it looks like. You will still see it in the chart. Retracement level. This is it. You can see. Now price has broken above this level. Now this is what how to plot that recent level. When price has broken this, so plot this one out. Plot it out. Because price has broken through, price will come back to test there. When price fail to test to respect this zone, that is when price will come on to this zone here, because there's also a zone here, F&R zone here. That's when price will come back to test here and continue on buy. But first, price will first of all react within this recent retracement zone. Get it? Number six, check historically. Is it a frequent zone? If you watch closely now, you can see this is the current zone, right? Good. And this make it what? It has happened before historically. So that makes this zone very powerful because it has happened before. It is what? A frequent what? Zone. That makes it frequency. Have you seen that zone frequently before? Yes. One, the first one, which is the recent one, frequency. That makes it frequency and recency zone. How to identify a valid F&R zone? How then do I identify a valid F&R zone? Number one, look out for areas where two opposite candles meet. Just whenever you open the chart that respect these zones, just look out for area where two candles meet. Look out for it, number one. Then number two, from where you are plotting the zone, which is the body of that two opposite candle which you are plotting the zone, two full form candle must have moved in that direction. Two full form candle must have moved in that direction, just as you can see here. So we are in an uptrend, and what we saw this opposite candle that pumped down, and we also have a bullish candle here, and we see this bearish candle. Now one has formed, the second one has formed, and now this is the third candle. We don't know the outcome of this candle yet because this third one, because it has not yet fully formed. So since these two, one, two has fully formed, so that makes this zone a valid zone. This for uptrend, this for the ceiling, and this for the floor. Look at the floor here. So we already have this already in an uptrend, and what one candle did the retracement to the downside, and what we see one bullish candle to the upside and another bearish candle, and what another bullish candle to the upside for this. So since two bullish candle has already formed to the upside, that makes this zone valid. Since you've already seen two bullish candle to the upside here, that makes this zone valid. So it is what in a downtrend. Number 4, on the floor where the two opposite candle meet, it has to be plotted on the close of the bear and okay, we've not done number 3. Then number 3, on the ceiling where the two opposite candle meet, it has to be plotted on the close of the bull and the open of the bearish candle. And number 4, on the floor where the two opposite candle meet, it has to be plotted on the close of the bear and the open of the bullish candle. As you can see, number 3, it said it has to be plotted for the ceiling side. You can see this is the close of the bull candle. How to know a valid one or how to plot a valid one. This is the close of the bullish candle, and this is the open of the bearish candle. So on the body of these two candles, that is where you have to plot it on. And this is the open of the bearish candle. This is the close of the bearish candle, which is to plot your floor. On the floor, this is the close of the bearish candle, and this is the open of the bullish candle. It has to be plotted on the body of these two opposite candles. That is it. So if this one now is fully formed, if this one is now fully formed, I will now see another candle popping up and here, up and down. That make this zone here a valid one. So you have to plot it on the body like this. Since there is a little gap here, plot it on the body of this bullish candle. So your eyes will be like on this zone. You know it's always a zone. That's it. Now, two type of F&R zone pattern. There are two type of F&R zone pattern. We have one, the continuation pattern, and two, the reversal pattern. What is the continuation pattern? Something like this. This is the continuation pattern. So the market is already in an uptrend and one candle did a retracement to the downside before another bullish and another bullish, and now we've not known the fate of this 10th candle yet. That makes this a reversal pattern. And what really makes it a continuation pattern, not a reversal pattern, a continuation pattern? What makes it a continuation pattern is because the other candle that formed before this bearish candle that appeared in an up move has fully engulfed this previous one. That makes it what? A continuation pattern, because this one fully engulfed this previous one. That makes it a continuation pattern. You can see it in all time frame. And now the reversal pattern. This is a reversal pattern. This is it here. So we were in a downtrend, the market is coming to the downside, and then one candlestick did a retracement to the upside. And the next candle that popped up after this one candle that did this retracement to the upside is a what? A bearish candle. But this bearish candle did not engulf this. You see, this bearish candle did not engulf this bullish candle that did that retracement. It's the next one that engulf it. In most cases, it will either be the third one. You see, so this is now called the what? Reversal pattern. This is called the reversal pattern. And in this case, if the market is coming back, market will not come to this point. market will rather come back to this point. This is where the market will react before selling. Market will not react here. But on this case, this continuation pattern, market might either, you can see what market did. Market came back to react on the open of the body of this candle, you see. So market came back. When market get to the open here, that's when market will continue what's buying. So on this continuation pattern, your eye should be on the open and the close, because you don't have to tell market where it will react. Market might either react on the open or on the body of this continuation pattern. That's that for that. Note, you are to buy when price gets to the floor and to sell when price gets to the ceiling. However, it is not a must that price will respect this point, because price movement can change. For example, an area of floor can become ceiling if buyer change, and ceiling can become floor if buyers change. You can use this support. You can use this F&R zone to analyze and trade only this pair below. This F&R zone, you can only use it to analyze this pair below. In the forex space, you can use it to analyze GBP JPY, USD CAD, NZD USD, USD JPY. You can take a screenshot of this and try these zones on any of this pair. In the stock space, you can use it on NAS 100 and US oil. And in the crypto space, you can use it in BTC USD. I have tried it on all the pair and they gave me what good entry confidence. So you can try it at your own spare time and see how effective it was. And me, I'm what a good trader. I trade SAUSD frequently, or like 90% of the time. So it's worked there perfectly well. And the reason is that I just want to stick to one pair. That's why. If not, it works in all this, but I just want to stick to trading one pair. And in synthetic, you can use it in V75, V100, V25, and V25 and V25 1x, V100 1x, V75 1x. It worked perfectly there. As a swing trader, your major F and R zone should be on monthly and weekly, and your minor or your sub F and R zone should be on daily, and your entry should be on H4 or H1. Then as a day trader, your major F and R zone, not S and R, frequency and recency zone, should be on daily and H4, and your micro F and R zone should be on H1, which is where you'll be looking like, if the market gets to here, how market will react within those zones will be what will inform you if you should close the trade at that moment or you should still hold the trade. And your entry should be, your entry point as a day trader should be on M15 and M5. As a scalper, your major is on H1, strictly on H1. You can also add 30 minutes to it, and your micro or sub zone should be on M15, and your entry should be on M5 or M1. Now let's go to the chart to learn how to plot this F and R zone. Yes. This is the chart. We'll be using SAUUSD to plot the F and R zone. We'll be using gold to plot the F and R zone. And you can see on H4, let me bring this. Let me bring the step-by-step guide on how to plot this F and R zone. So this is it. Number one, it says look out for areas where the market look out for areas where two opposite candle meet. This is just based on where two opposite candle meet. Look out for area where two opposite candle meet. So you can see two candle meets here. One, two. These two candles are opposite. Remember, we plot your zone first of all. Just as you enter your house, you look for your eyes gaze at the ceiling and the floor. That's the first thing you see whenever you enter your house. That's it. Yeah. Whenever you open your chart, look for way to what to spot out the ceiling and the floor zone of either the support and resistance zone or on the F&R zone, which is the frequency and recency zone. So we are on F&R zone now. That's what we are dealing on here. So spell it out. Now remember you are told to look for where the area where two opposite candle meet. These are one, two for the ceiling. Now take any of your two. For me, I love to use my trend line two. So this, plot it on the body. Number two, they say it has to be plotted on the body of the candle using your line two and not the wick. So it has to be plotted on the body of the candles like this, using your line two and not the wick. And it is good to always label it so that you will be able to differentiate the each zone so that you'll be able to differentiate it. And on the support and resistance, it is good to use different color so that you'll be able to differentiate it. So for me, I want to label this. It's just easy way. Let me teach you how to label it easy way. When you've plotted it out, double tap on it or click on this setting here. Click on this setting. Then at first it will take you to coordinate. Then you click test, and at first this is how it looks like. Then you come to this text box to activate the text, then press the time frame. We are on H4, press H4. If you want to spell it out bold like hourly, you can do that. Then this is how I do mine. Then come to the text alignment, put it at the middle or whichever way you want it to be, at the top side or the corner. So, and do you want it to be at the center or left hand or right hand? So, I just want it to be at the center. Press OK. If you want to change the color, this is where to change the color here. And the size, this is where to change the size. Want to make it bold or slanty? I prefer it to be slanty and I want it to be bold as well. So then press OK. That's it. I said recent floor level, where number three, recent floor level where two opposite candle meet. Okay, close to the current price. Now we've plotted what this one, recent floor level. This is for the ceiling, which is number four. Then now let's plot. If you want to take another one, you can do it. If you want to clone this one, you can clone it. Just when you click on it, the article of it will show up. Just click on this. You see where you can clone it, clone, another one pops up. So just take it, then we'll do number four. Now we say recent. We've done number four, then now let's do number three. The recent was the floor level. Take it to the body. This is the body of these two opposite candles. This is where the market currently is. You see, this is the body of the two opposite candle that's close to the market on the floor. This is the floor. Extend it to the future. This is it. And now it said recent retracement zone, or the area where price recently pulled back. And you already know when it says price moves in fractal, price does not always move in one direction. These are price move, low, high, correctional impulse, correctional impulse, correctional impulse. So when this price is coming back, it will come to first of all react within this zone here before coming to this zone. So you can see now when price is coming back, price will first of all react here. You get it? Here, or price will come to this part. So then what, you take out this zone, this recent retracement zone, you clone another one again, you clone it, clone. So you take price. From here, I will take this zone here. From here, I will take this one here. This is where the another two opposite candle meet. I will take here, and I will also wash out for this point here, this point here. The reason be that price might can easily break through from this point down to just test this point where these two opposite candle meet and continue buying. So I plot down at, then the was next, the other next one. What if price now? So the next retracement is here. This is it. So price has broken this zone. Since price has broken this zone, so price might likely come to this retracement place, this retracement zone, to retrace to this zone, hit it and continue selling, or break above it to this point before it continue selling. That's it. Price might either get to this point and continue selling to the downside, or pull to this point and continue to this other side. That's just how to plot your F. That's just how to identify your F and R zone. That's it. And what else again? What else again? What else again? They say, okay, check historically, is it a frequent zone? Is it a frequent zone? And let's check this one. I think this one is a frequent one. So let's extend it to backside. You can see it's a frequent one. Price has spared that zone before. So still extend it, and you see it's a frequent one. Remember, it's a zone and not just a line. See properly. So if you should plot this to this point, you see price gets here, pull back, price gets here, pull back a bit, books finally came back, book a bit, and come back to the test, and will drop down and get to here, pull back, and finally broke it. So we should be expecting price to hit this point. And please mind you, the area you should look at for the retracement should be the recent retracement zone, not the previous, like this part. No, not this part, the recent one. Where is the recent one? You can see the move is in an uptrend like this. So where is the recent one? This is the recent retracement the market did. This one, don't use this one here, don't use this, don't use this. This is a recent one. Only use the recent retracement or zone. This is a recent, and if you see, this is a recent one as well. You get it? So use the recent ones. This is a recent one, this is a recent one. So now if price break this, break below this, break below this, price might likely get to this point. You get it? So this just the okay. Now how do you identify if the zone is valid? As you can see from this diagram now, it said to identify if the zone is a valid zone, it has to have two candle push to the downside. Okay, let's do something like this. From this H4, you can see from this H4. So you can see from this H4, the market is yet, the current market is yet, so this zone here is not yet valid. This zone is not yet valid. The reason why, because we've not seen two candle fully form to this downside. Yes, fine. This is a zone. They said this is a zone where two candle or two opposite candle meet. Yes, it's a zone. But is it valid? No. Why is it not valid? We've not seen two candle moves in this one direction. Since the market has decided to reverse to this direction, we've not seen two fully formed candle to that direction. And now, okay, what will now be our recent selling zone? For now, there is no yet a recent selling zone because gold has what come to its all-time high. So just plot your retracement zone and your retracement zone here and your floor zone here. You get it? This your retracement zone is also known as your floor zone since it's what below price, and this your retracement zone is known as selling zone since it's above the current price. You get it? So now let's press our play. You can see this is now what valid zone. The zone here is now valid. Why is it valid? We've seen two candles push to the downside, two fully formed candle push to the downside. That makes this zone what this zone here a valid zone. That makes this zone a valid zone. So from this, let's outline our zone. There's it. That makes this zone a valid zone because we've seen two candle push what two fully formed candle push to the downside. So it is the opposite of this that you do in the down. Like you must see two candle push to this upside as well. So for you to plot your let me just use the replay tool so that you understand it better. For the now, this zone is not yet a valid zone. So this is our valid zone because we've seen two candle push to the downside, two fully formed candle, and the third one is yet to be fully formed. You see, so and now this is our recent high. Let me put this here. This is our recent high, which is the recent selling zone extending to the future. And see, so price is about to break this one. Let's see, my price might get here and pull back or break and get to here and pull back or break above the two. Let's press our play two. You see how price is reacting within that zone because price finally broke above the zone. But when price get the price reacted within that zone one, two, you see the reaction, but it finally break above the zone. And let's continue. You see, price also did not expect this zone. One time it broke above it one time. And the reason why I will say it broke above it one time is because there is price has never done a frequent zone there. If I see just one recent, but when you see this one, when price get there, it first of all, it respect that zone to know that what this is a recent zone, or this is a frequent zone. This is a frequent zone. So mind the way you broke through me. So price first of all done ballet like respect the zone before it finally broke through the zone, and you can see one time broke. But in most cases, when price want to respect the zone, you will see multiple rejection. Yeah, in most cases. Let's continue. Okay, since two candle has already formed, so this is the reason why we use the replay tool. So let's not forget, since two candle has already formed to the upside before this third one formed. So and the market is currently on this third one before this fourth one form, so that makes this zone what a valid F&R zone. So let's continue the play and see what market will do. Do you see what I'm saying? You see? When market broke above the zone, what market did? Market came back to retest the zone and what? Continue buying. So you see, remember it's a zone. If you drag it like this, you can see market almost get to that zone. It did a retracement almost to that zone before it continued buying. And see, let's go. So that's just it. Now that's okay. Let's talk about the two pattern. The two pattern on. Okay, let's go to H1 to spot it. So plot this F&R zone on daily H4, H1 and send it to any of the social media space you think you can have access to me. Just send it to me, and if you if there is any way to correct you, I'll correct you. And if you get it right, I will also let you know that you get it right. So you can see this is the continuation pattern. You see the market is already in an uptrend moving to the upside, and you see it gave us one candle that did one retracement, and what the next candle fully engulfed the previous bearish candle, and see it still continue what buying. It means what the market will still continue to buy. So it's a continuation pattern. And another one here, and you can see the market, or this is a consolidation, which is this up part is a consolidation pattern. Consolidation pattern. Then let me search for the reversal pattern. Let me see. I spot one recently. Let me see. This one reversal pattern. Let me delete this. In a downtrend, you can see the market is in a downtrend and give us one candle that pulled back. Then the next candle did not fully engulf this. You can see the next candle did not fully engulf this, but the second one engulfed it. So this is called what? A reversal pattern. So in this reversal pattern, the market will what? Will get to this point before what? It tanks down. Before it turns down. Why in the continuation pattern, just as I explained, so the market will come to the either this open, or this close. That's where the market will either get to. So this continuation pattern, the both open and close of the candle that did that reversal pattern is known as your zone. So you should expect market to do any move, should react within that zone. So in this continuation pattern, the both open and close of the candle that did the retracement is known as your zone. So you should expect market to react within that zone. Why in this reversal pattern, the end of why in this reversal pattern, this is where market will react to, not this point. The candle will definitely break above here and come back to react here before continue selling. That's just it. But you see, this market failed to respect it. Market came to respect the zone here and sell down and sell to the downside. You get it? So that's it. Let me see if I can see another one. Okay, that's just it. That's just it. Since I've shown you how to spot the reversal pattern and the continuation pattern, and also how to plot your a proper F&R zone, please plot it and what, send it to me for assessment. Now, I believe now you understand the difference between the support and resistance, and the difference between the frequency and the recency zone. Remember, the frequency and the recency zone are one, they are one, just one. So, but you just have to plot your ceiling and your floor. While the support and resistance, the support zone stands for the floor, while the resistance zone stands for what? The ceiling. That's it. See you in the next one.